Hi guys, and happy new year. Welcome to 2019 and welcome to our very first Facebook Live for the year. We're really excited to be bringing you these Facebook Live videos again for you in 2019, and we're starting off this year with a great topic, and I'm joined by Twee Nugent, who is one of our fantastic award-winning mortgage brokers at Rise High, and today we are talking about getting your finances sorted for 2019.
Yep.
So it's a big topic. We're going to cover a lot. Hopefully you leave with some great tips on how to make sure that this is the year that you turn your finances around, take control, and really make this year count to ensure that you can have the financial future you want. So that's what today's about.
Yes, it is.
Yeah, and really excited to have Twee here. She'll get really embarrassed when I say this, but she's actually up for an award at this year's coming Mortgage Broking Better Business Awards. She's up for Best Customer Service out of all the brokers in South Australia, which we think is a great achievement.
Thank you.
And we also have a couple of other brokers up for awards as well as some business awards. So we'll tell you more about that later, but really excited that Twee could join us because she is great at managing money and has some really great tips to share. And today we're just going to be having a bit of a chat about some of our tips. If you have some other tips that you'd like to add, we'd love to hear about them in the comments. So you can leave comments below. You can email us at amanda@risehigh.com.au. Amanda's behind the camera and she'll be taking down the comments and questions. So please feel free to send them through. And also, if you've got any questions about anything we talk about today, please feel free to send them through. We want to make sure that you get value out of today. So anything that you want to know or want to chat about, please get in touch. Okay, let's get started.
Let's do it.
So the first thing that we were going to talk about, Twee,
Yep.
was the importance of setting goals
Yep.
in 2019. So let's discuss that.
Yep.
So why is it actually important to have financial goals?
Well, being the start of the year, there's no better time to sit down and spend, half an hour on working out what it is you want for your financial future. And setting goals is a great, process for you to go through with your partner or your family, and getting everyone involved so they're all connected and you can all achieve the one goal.
I think that's such a great tip, because it's not only important for you to individually know what you want and have clarity over what you want with your finances, but if you do manage your finances jointly or you are in a relationship,
Yep.
it is actually a really good idea to have that dedicated chat with your partner.
Absolutely.
Or, so you can actually be on the same page.
Yep.
With how you want to manage your money in the coming year.
Yep.
And what you want to achieve from a financial perspective.
Yeah.
I think it's a really good
For
opportunity
sure.
to have that detailed discussion and
Yeah.
really set some good quality
Yep.
time aside to go through that chat.
Yeah, and that's the difference between setting a goal, which is measurable. It makes you accountable by sharing that goal with someone,
Yes,
with your partner, your
that's
money
important.
mentor, and making it, visualizing that that coming true for you will help you achieve that faster, and it will help you achieve it. And having an action plan behind it breaks down that big goal into smaller steps, achievable steps that you can tick off and feel a sense of achievement, as opposed to having a New Year's resolution, which is generally short term, and it doesn't normally have an action plan behind it. And if you can achieve it, great. Most times it can be forgotten after a few months.
I'm a big fan of the SMART goals.
Yep.
Specific, measurable,
Yep.
achievable, realistic, and having a time frame attached. And
Absolutely.
I think that's a really good guide for financial goals as well. And
Yep.
I like what you said about not just making sure that it's a short-term thing like a New Year's resolution, but really implementing, change of money habits.
Yep.
Because I guess when you are looking to implement some big financial goals, really what it does require a change of habits.
Yes.
A change of daily activities. And those habits and daily activities will hopefully not only help you to achieve what you want to achieve this year, but will actually give you some really good activities and really good habits to go into the future with, which will help you with your finance goals, for many years to come.
Yes, absolutely.
Excellent. So what would you say is the first step to setting good goals?
I think the very first step is to really work out what it is you want for your future in the financial sense, because you'll have personal goals, your finance goals, you'll have work goals, but we're talking specifically about finance goals. So what is it you want for your retirement? What is it you want for the next 5 years? And then when you have worked that out, get excited about it, and then put a plan together to break that down to help you achieve the steps.
Yeah,
so
I think often in Australians, we are often quite short-sighted.
Yes.
With our finance goals. You know, we might just think about the next holiday or the next car purchase, or we want to move into a new house. But it's not until we probably get a little bit later on in years that Australians start to think about retirement.
Yeah, that's right.
But you mentioned that. So how early do you think people should start thinking about their future, and you know, what sort of age do you recommend?
I think there's no time to start than now. Better time to start than now.
So the sooner the better, really.
The sooner the better, because depending on what investment vehicle you like, whether it be property or shares, both need time to grow in value for you, and they need time for you to pay down the debt, so that eventually those assets will become a passive form of income for you.
Yeah, I couldn't agree more. So, I mean, it's great for everyone that's watching today to actually, you know, go out there and actually not only think about what you want to achieve in the next 12 months, but also think about what you want to achieve long term and in the future, and what sort of lifestyle you want to have. You know, when you want to retire, how much income do you want to have when you retire, and you know, really exploring all of those different things. So.
And I think while you're going through this process, I think understanding debt is really important as well. Bad debt versus good debt.
Yes.
And understanding your needs and wants, because you may want something, but you may not need it. So for a small sacrifice at the beginning so that you can achieve your goal long term, by understanding your needs and your wants and the bad debt and the good debt, that can help you make your decision to get you closer to your goals, your financial goals.
Yeah, I mean, that all sort of stems nicely into the next topic that we wanted to talk about, was really the importance of savings. And saving in 2019. And I think regardless of what you want to achieve in your financial future or what you want to achieve this year, inevitably you will need to save money to achieve it. Whether you're wanting to invest for your future, whether you're wanting to go on a great holiday or buy a car or buy a house, whatever you actually want to do, generally, or in most cases, it will involve some form of elevated savings. So can you just talk us through, you know, the importance of savings and how you recommend people to make a shift in their spending habits? So that they can actually accelerate their savings to achieve the goals that they want to achieve.
Sure. So I was lucky enough to read a book in my teenage years, and I'm sure a lot of our followers may have already read this book by Robert Kiyosaki, Rich Dad, Poor Dad. That's been an instrumental book for me as a teenager to understand money and debt and good debt and bad debt. And the fundamental thing that I learned out of that was pay yourself first. So as soon as you get your pay, generally people put 10% aside. Not everyone can do that because of your circumstance, but at least put some money aside. Paying yourself first into a bank account before you even see the money. So what you don't see, you won't spend. So one of his principles is to pay yourself first, and that's your savings. Irrespective of what income bracket that you're on, everyone needs to have some savings for that rainy day, and then spend what's left. And if you're finding it hard to save, it's most probably because you're doing the opposite.
You're spending money and saving what's left over. But
exactly.
Really you should be saving first a dedicated amount and then spending what's left over. And I think, you know, you would probably agree with me, Twee, because you've been in finance and mortgage broker for a number of years now. But what I've really noticed over all of my time in the banking and finance industry is that it really doesn't matter how much money you make. That's not what determines your financial success long term. It's actually determined by how much of it you keep and how long you keep it for.
That's correct.
And that's really the philosophy of paying yourself first. So I think that's a really great tip to share with the audience today. And, you know, I think that will see everyone really well for 2019 and beyond if you make that ability to do that.
And if you continue to do that, it becomes a habit. And as you all know, a habit you don't know anything different but to save.
Yeah,
so,
excellent. I'm just going to interrupt because we've got a few shout outs.
Okay.
Shout out to James, Amanda, Sarah and Frankie. Thanks for joining us, guys. Really appreciate
Hello.
you tuning in.
Thanks.
If you've got any suggestions, flick them through. But we're going to continue now.
Yeah.
We're going to talk a bit more about savings because I think that's going to be a really hot topic for 2019 and beyond. Because not only is it going to help you to achieve your financial goals, but now your money habits and your spending habits are going to start to impact you in a negative way if you actually don't make changes.
Yep.
So I just want Twee to talk through that. How is people's spending habits currently going to impact them, and what can they do to make sure that they don't get negatively impacted?
Okay, so Marissa, you're referring specifically really to a loan application. How
I guess
is
people's
that?
borrowing capacity. Yeah.
So at the moment, if you already haven't heard on the news, most of the banks are stress testing your income a lot more closely than before, and they will look at your bank statements to really validate your spending habits and your saving habits as well. So they're looking more and more closely into your conduct. So if you are asking the bank to lend you money, they will look at your income, they will look at your living expenses, but they'll also look at your spending habits.
Yeah.
And if you don't have any savings and you're spending more money than what you're earning, and then you're asking them to borrow more money, then all of that will come together and play a vital role as to whether they will lend you the money or not.
So if somebody cuts back on their spending and really, keeps that under control and is able to put a larger amount of their income aside into savings, is that going to help them to be able to borrow more money when it comes to borrowing money for a loan?
It's definitely going to improve their application in terms of conduct because they're demonstrating to the bank by having money in an account that they have surplus money. They have the ability to save money.
Yeah.
They've got surplus money at the end of every pay cycle.
And it's reducing their expenses, which
exactly
helps us to prove servicing.
Yeah.
So, look, saving and paying yourself first is not only going to be a great habit to see you through the future, to help you to achieve your financial goals, but it will also help to improve your borrowing capacity. So definitely, especially if one of your goals revolves around having to borrow some money for a house or a car or an investment property, paying yourself first and changing some of your spending and saving habits will definitely go a long way to helping that.
Yep.
Excellent.
Perfectly said.
Okay, so we've talked about setting goals, we've talked about savings. Now I want to talk about a topic that I really get excited about, which is creating a passive income. So like we said in the beginning, people don't think about retirement until, they're ready to retire, which I think is way too late. And when I think about retirement, I love what I do. I don't want to retire, but it's more about having the freedom and the choice to choose when you stop working and how you stop working or how you want to live your life. That's what I think about when I think about retirement. But can you just talk about, why is it important for people to start considering creating a passive income, and at what stage of their life should they think about it?
Yep. So I'm going to use myself as an example. I'm going to share it out there.
Yeah, great.
I'm in my 40s, and
you don't look a day over 21.
Thanks.
Twee.
Thanks. And I've already started planning for my retirement years back, because I would like to have choices when I retire. I want to retire on my terms, and like yourself, I love what I do, and I can't see myself retiring, but if I choose to work, that's because I choose to work, not because I have to work.
And it's really nice to have that choice, isn't it?
It is. And to have that, you have to design that lifestyle that you want. And to design that lifestyle you want, you have to plan your financial future around that as well.
Would you say that it's never too early to start?
Absolutely, never too early.
I mean, I guess the earlier you start, the better. I mean, saying that, it's also never too late. In the sense that please don't get worried if you are sort of closer to the retirement years. It's better to do something about it as soon as possible than just to worry about it.
Yeah, it's better to do something than nothing.
Yeah. And so what sort of options do people have if they want to start looking at creating a passive income?
Yep, so first of all, let's look at diversifying your income and creating other streams of income apart from your main source of income. So I'm talking about the most common source of income would be investment in properties.
Yep.
You could look at shares, you can look at bonds. So whatever vehicle it is that you like, you know, get some knowledge behind you. Go to seminars and understand about the different types of investment properties that you can look into. You can, you know, study about shares or come and speak to us, your mortgage brokers, so we can help you work out your borrowing capacity and get you to the next stage and help you, introduce you to other professionals that can help you achieve that goal. So definitely diversify and not just stick to one source of income.
Yeah, absolutely. I couldn't agree more. And I think building up those passive income sources is also going to help you to ensure that you can actually, like you said, you can have the lifestyle that you want long term on your terms.
Yep.
And you can actually, you know, get ahead financially, but also have the freedom to make choices.
Yes.
And choices is a really lovely thing. I'm going to pause right there. We've had a question come through from Amanda. So Amanda asked, we've always kept our savings in our mortgages redraw. Does this count as savings to the bank? So what I would say, Amanda, is, well, get Twee's comments on it, but definitely any form of savings and wherever you keep it, as long as it's an account with your name, is definitely beneficial. And the more money you can save, the better. If you know that your current home loan is going to always be a home, like for a home, you're not planning to convert that to investment property, then there's absolutely no issues with saving the money in the loan.
No.
But it does become quite complicated if you're planning to convert your current home into an investment property in the future, in which case maybe having your savings stored in the loan may not be the best vehicle for that, and maybe an offset account might be more appropriate. But that's definitely something that you should speak to your mortgage broker about, just to make sure that saving the money in the loan is the right place to save it.
Yeah.
So would you agree, Twee?
Yeah, absolutely. And to answer that question, the bank will look at that saving in redraw as savings, because that's additional money on top of the loan repayment that you're obligated to pay. So that's why they'll allow you to redraw that back out, because it is technically your money that you're putting in.
Yeah. But great work, Amanda. Obviously,
Thank you.
are able to save, which is a really good sign. So keep up the good work and just make sure that you're putting those savings in the right place to help you with your long-term plans regarding that property.
Yeah.
So I'm going to get back to creating a passive income. We've talked a little bit about how we can use investment vehicles like shares and property to create a passive income, and how important that is for retirement planning. I'm going to put you on the spot, Twee. Do you have any property hotspots people can look at?
I do, and you know, if you're a local as well, you would most probably drive around these areas and see a lot of developments happening in these areas. And I come across investors and they've got a lot of concerns around the eastern seaboard. So I would say that Adelaide is earmarked for a lot of growth in the next 3 to 5 years.
Adelaide is due for a bit of growth.
Yep.
It is expected that Adelaide is going to outperform all capital cities in Australia over the next 3 years, which is really exciting for the Adelaide real estate market and for investors here. But what I would say is that you have to get in quick if you want to experience those growth.
Yes, so some of the hotspots that I've read in some of the hotspot magazines and articles that we get access to, I'm thinking the Playford Council is going to be earmarked for some growth, Salisbury area, the Onkaparinga area, or council area, Marion council area, and Playford.
Well, there's definitely lots of opportunities, I think, throughout South Australia.
Yep.
So definitely keep on top of those. So thanks for your hotspot tips.
That's okay.
It's always good to hear from another investor as well. And I think the other thing that you can do, if you're interested in property investment, definitely register for some of our investment seminars this year. We are once again running some great property investment seminars during 2019, and you can get all of the details of those on our website, which is risehigher.com.au. And definitely, if you want to learn, please come along to those. Or you can also set up a private consultation with one of our mortgage brokers, which is of course free, and you can actually talk through your specific goals and they can help you to achieve those goals as well. So there's lots of options there for you to help get you started.
Yep.
Okay, I'm going to move on to our tip number 4, which was finance health check. So when it would be great for everyone watching to do a finance health check during 2019. What specifically should they be checking in their finance health check?
Yearly, I recommend you should have a health check of all your loans. They're the biggest debt that you'll have, and the slightest savings that you can get from the interest rate is going to mean massive savings for you. So definitely review your home loan, your investment loans, any loans that you have, review them.
I know that we've been doing, annual reviews for clients as we do.
Yes.
And just by going back to their banks and asking for more discount, we've been able to save them a lot of money every year, which is really exciting. So definitely it's a great time to be trying to get a discount on your current lending. So definitely speak directly to your mortgage broker about that to try and get some savings there.
That's right. Don't put it into the too hard basket. Contact your bank, your broker, and just do the exercise, and at least look, yes, we got a savings, which is great. You can put that extra savings to the savings from the mortgage into your savings, or at least you can say, look, I may not have the best rate. Let's look at some other options.
And instead of, if you do manage to get some savings there, instead of spending those savings, why don't you put those in your pay yourself first?
Exactly. Put into that savings account.
Yeah, absolutely.
Yep.
You're reviewing the debt.
Yep.
What else can we review?
Insurance as well. It's a really good time
premiums have a habit of creeping up.
They do. And if you set and forget insurance, they will continually increase. Yet your vehicle perhaps is going to decrease in value. So it's really a good time to, every few years or even every year, if you've got the time, to just do a few phone calls and compare a few insurers. Car insurance,
but also personal insurances as
exactly.
Well. What else should people check?
If you're self-employed, particular for self-employed people, I would do a tax planning and financial review with your accountant this time of year. You have already gone through 6-month cycle, so you have some idea of what your income will be for the next 6 months. So sitting down with your accountant now would be a good time to plan, okay, so this is my projected income for the next 6 months. So you might, and your accountant may sit down with you and come up with some strategies to either reduce your tax, put some into super, buy another investment property. So it's a good time to review all of that and plan.
Yeah, I think that would be some great tips. I'm just going to do a bit of a summary just for the people that are joining us on now. We've got a few new viewers. So we talked about setting financial goals for 2019 and the importance of doing that. We talked about savings and paying yourself first, and that's probably the number one thing that people can do to really transform their financial future. We talked about creating a passive income, which I hope we've inspired a few people to go out there and really make that happen for themselves and build that passive income up so that they can give themselves freedom of choice, which is really, really important. And we talked about doing an annual finance health check. Of course, any of the team at Rise High can help with any of these things. So if there's anything that you would like help with, please get in touch. Do you have any key take-home messages that you would like to leave everyone with tonight, Twee?
I set goals, work out what it is that's important to you and your family in a financial sense. Set those goals. Set them measurable, set long-term, short-term, medium and long-term goals so that you can create a better lifestyle for yourself.
Excellent. Well, I'm sure you'll agree. Oh, sorry, did I?
Sorry, and have choices at the end of it.
I think choices is really important.
Yeah.
Yeah. So,
for sure.
As I've said throughout the session, we'd love to see you at one of our seminars this year. This year we've also expanded it. We've now got some first home buyer seminars and some different types of seminars that we've included in the mix. So please hop onto our website at risehigh.com.au to check those out. And if there's anything we can help you with in the meantime, please get in touch. Thank you for tuning in, and we'll see you next month. Bye.
Bye.